In this final section of the book, we're going to look at what deductions come out of your paycheck. So first, let's talk about gross pay versus net pay. Gross pay is the total amount of money that you make. This would be your hourly rate times the number of hours you worked. It would be an agreed upon amount that you would get per job. It would be an agreed upon amount that if you had salary, or the total amount of commissions. The net pay is what you get once the company takes your deductions out of your paycheck. So when you look at your gross pay, it's quite a bit more because you still haven't taken certain things out of that paycheck. The net pay is the amount that the business actually gives you on your paycheck. That's the net. So there's three different types of deductions. The first type we're going to look at is taxes. Everyone pays taxes. And the first one we'll look at is Fica taxes. That is actually everything you make is taxed at 7.65%, and that is withheld from your paycheck. 6.2% of that goes to Social Security and 1.54% goes to Medicare. And those things are taken out automatically. There is a cap on that, but most of us don't have to worry about that cap. We have federal withholdings that are taken out because if you make a certain amount of money, you have to pay federal taxes. You also have to pay state taxes. In some places that people live have to pay local taxes. Another type of deduction you have would be insurance. So a lot of families have medical insurance taken out of their paycheck. They have dental insurance, they have vision insurance, they might have some supplemental insurance, so things like long-term disability, maybe cancer insurance. You can buy these life insurance. You can get these at your work a lot of times, or you can pay for them separately, but if you get them from work, they'll deduct it right out of your paycheck. And then also people can have things called an HSA or a flex spending account. So you can take money from your paycheck and put it into these two different types of accounts. They work a little differently, but basically as you have medical bills, you can use an HSA or a flex spending account to help cover the cost of those bills tax-free. The last thing people typically have taken out of their paycheck is retirement. So you can have a 401k account, or you can have a Roth IRA account. In both of these, they take the money directly out of your paycheck and put it in those accounts. Now, we're only going to have one sample problem this week, but it is going to kind of bring together quite a few of the ideas we've seen from the previous parts of this chapter. So we have Louis Landry. He's a music director for a local orchestra. He's paid by the month, but he makes $115 per hour. Assume he works 40 hours per week and that there are 4.33 weeks in a month. Now, before I keep reading, you may be thinking, how in the world are there 4.33 weeks per month? There's only 4 weeks in a month. Well, actually, there's 52 weeks in a year, and if you divide that by 12, because there's 12 months in a year, then you would see that it comes out to 4.33. So in accounting, a lot of times they look at things based off of 4.33 weeks rather than just 4. So just kind of wanted to throw that in there. He has the following taxes withheld from his paycheck. He has Fica taxes of 7.65%, federal taxes of $4,300, state taxes $1,500, local taxes of 2.1%. He has medical insurance taken out for $500, dental for $150, and he withholds 10% of his income for his 401k account. So what is his monthly net pay? So there's actually two different things we need to calculate here. We need to calculate what his wages are, like what he actually makes for his wages. So his wages are going to be equal to this 115 times the 40 hours per week times 4.33 weeks per month. And when I calculate that out, that's going to give me $19,918. That's how much money he has coming in. The next thing I want to look at are all of these deductions because there's quite a few. So I'm just going to add them all up at one time. So I'm just going to write deductions. So underneath here we have FICA, and that is a percentage. So what that means is I'm going to take this 19,918 and I'm going to multiply it by this 7.65%. I converted it to a decimal, but I'm multiplying it by that amount. And when I multiply that out, that means he's going to pay FICA taxes of $1,523.73. So $1,523.73. For his federal, they've already given it to you. There are ways to calculate this out. I just wrote Fed. A lot of times you'll see things abbreviated. There are ways to calculate this number out, but we're not really going to focus too much on that in this chapter at all. He has state taxes that are withheld. Each state has their own setup, and so they may have more property taxes, they may have income taxes, but a lot of times the state taxes, no matter which state you live in, are less than federal. In this case, he also has a local tax, and again, this local tax is a percentage. So we're going to take this $19,918 and we're going to multiply it by the 2.1%, and when I do, that's going to give me $418.28. He has on here that he's withholding for medical, so we'll take out his medical, and that's going to be $500. He takes out for dental. He has to pay dental insurance, and that's $150. And then the last thing he takes out is his 401k. And with his 401k account, again, it's a percentage. So we're going to take this $19,918 times 0.10, since that's 10%, and that's going to give me, when I multiply that out, $1,991.80. And I'm going to add all of these things up together, which adds up to $10,248.81. So this was his gross. These are my withholdings. I'm gonna subtract these withholdings off of this gross paycheck here. And when I do, the paycheck that he gets from the business for the month is going to be $9,669.19. This is the net pay. So this was the gross. Oops. Gross. This is what was deducted, and this was his net. And this might seem like a really small number, but I would say that this is probably fairly accurate in the sense of typically your net pay is going to be quite a bit less than your gross pay, especially if you're taking things out like insurance. If you're withholding for 401k, to withhold 10% of your income for a 401k account is not uncommon for people. Local taxes often are a percentage-based tax. This is a percentage-based tax, and then these are somewhat subjective. So depending on how much money you make, it's going to put you in certain tax brackets that are going to withhold more money for some and less money for others as a percentage of your total gross. So even though this looks like a lot, that he lost a lot of money, I mean, in some ways you didn't really lose this $2,000. It just went into a savings account. But at the same time, this is very appropriate, I would say, when looking at your paycheck.